All right, good morning, everyone. It's fired up here. Okay, last night's session in the U.S. Was a bit of a random one again. I mean, we continue to see, we've seen a lot of days, I would say, over the last 2 weeks where we've seen a steep sell-off or some sort of significant move to the downside in pre-market. Feels like you're building up for a real sell-off day. Yesterday early in pre-market action, we were down 14.5 on the S&P. Looked like we were going to collapse for sure. We reversed back up very close to flatline. Then we came back down still during pre-market to about 11 points down. And then we just managed to kind of hang on from there. European markets, everything looked really shaky, and we finally got some sort of clarity out of Greece with their a little bit more clarity in terms of a deal to suffice them at least through the month of June with creditors. I think that was a bit of relief, but they were kind of talking about that coming into the day already, so I'm not really sure that was enough to really get the markets going. We've continued on down the data set in the States. We had U.S. auto sales smashed expectations, a 9-year high. You can see there 17.9 million versus 17.3. I mean, that's enough to actually have a positive effect on GDP in itself. We have factory orders that missed. In the States, we actually fell 0.4%. So we continue to go down a mediocre at best data set in the States. We've really gone from being great only about a month and a half ago to mediocre or a bit soft in terms of the data points out of the States. That makes Friday's number on the non-farm payroll even more important than it has been for a while. And what we saw yesterday as well, and I'm not really 100% sure what the catalyst was. Maybe it had to do with the Greek resolution, but we saw a real hammering on the dollar. I think we were down about 1.6% in the DXY yesterday, the U.S. dollar index. So we really saw a big rally in the rand. We came from about 12.32, 12.33 at the lows up to about 12.19. Then we saw the euro at 109 and change. We dropped all the way to a 111.50. So we really saw some big moves to the downside in the dollar, and I think that potentially could be a little bit of what buoyed the markets there in the second half of the day. If we look in the Asian session overnight, everything down except for Hang Seng. A little bit of Japanese yen strength versus the dollar. I think maybe slightly putting a little bit of pressure on the Nikkei. Shanghai giving us another little bit of correction. Australia's been considerably weak for the past 4 or 5 sessions. It's been incredible how it was just kind of grinding higher for as long as it did. Now all of a sudden, I think, and we had good GDP numbers as well. You saw strengthening of the Aussie dollar again last night, but once again we see it down about 1%. I think they're starting to realize that there's going to be some real negative impacts there from the lag that we're seeing out of the Chinese economy. All right, moving on to our chart of interest. So this, we've been showing a lot of stuff relative to China and relative to the impact, of the stock market there, and it's incredible the divergence that we've seen between the Chinese GDP and the actual Shanghai Composite. And you can see there, so this is the GDP estimate, which has basically been drifting down here now for the last, this is a couple of years. We're at the bottom end of where we've been, lowest level we've been since 2008, or sorry, since 2009. And you can see the market's just going absolutely bananas. And if you look at the forward indicators or the forward analyst projections for GDP, they continue to actually come down. So, that doesn't get any better as it goes out forward. I think without question we have a stock market bubble. And the big thing is, I think people are paying attention to it, but I think largely markets aren't very concerned about any sort of contagion effect or spillover effect, and I think that they're underplaying that a little bit. I think if you see a total wipeout there, which I think is very likely to come in the next year or so, I think that there's more contagion than everyone thinks. This is the second biggest economy in the world, very close to the biggest now. We have a lot of debt spillover in U.S. dollar denominations across the globe. There's a lot of foreign investment, obviously, into China. This is it's driving the East. You've got to think that there's going to be a lot more ramifications for a collapse in China than people are thinking. So just keep that in the back of your mind if that does start to roll over at some point. Right. In terms of market data overnight, we had Japanese services PMI numbers coming out slightly better than prior numbers. The services PMI out of China, a shocker compared to prior numbers. Nationwide house price numbers out of the UK. We've got PMI out of the entire European region today, so the UK included. We've also got unemployment rate out of the Eurozone. We've got mortgage apps in the States. We've got the ECB coming out with main refinancing rates today. ADP employment change in the States. Trade balance. PMI in the States. ISM non-manufacturing crude oil inventory is probably the biggest data day we've seen in a couple of weeks. So just keep that in mind. As we go throughout the session today, we're going to see a hell of a lot of data. Watch the PMIs out of Europe and especially out of Germany and the UK. I think those will be potentially a bit of a driver for the market. As we get into the States, we're obviously going to want to pay attention to the ADP employment change, the PMI in the States, and non-manufacturing numbers. So just watch for those data points as we come out. All right, let's get into the maps. I'm going to keep it somewhat short today. You know, one thing that we've seen, it's been a common theme of the past couple sessions, has been selling in the retail space. We've seen not just retail space, an interest rate sensitive space. We've seen our 10-year yields go from about 7.95 to 8.30 here over maybe a week and a half space. That's enough to, I think, shift the asset allocation. And we saw yesterday the guys came hard for the miners. And, you know, the interest rate sensitive space is still lackluster. We did see a big bounce off the bottom, but I think we got to wait and see if we can start to get, if we can see a real bottom be put into place there over the next session or two. All right, what I want to look at this morning is major level here. We talked about this one yesterday. Don't believe us, go back and watch the recording for this yesterday. We talked about this level, about, call it 45,550 or 45,600, whatever you want to call this level. Zooming in a little bit more so you can see more clearly here. That's the level we came down. We literally kissed that level as well as the 200-day on the nose and reversed hard from there. And we reversed, if I'm not mistaken, close to 800 points from low to high. Maybe it was actually even more. Maybe it was about 900 points from low to high on the index, and that's a great reversal that further cements the importance of this level. So, you know, as we go forward, that is what, you know, if we start to come down and test, we know that this level is king. If this level drops, and especially if we get a close below this level, you know, then you really have to start to worry. So, and for the time being, this level is the main level that we're going to be paying attention to in the Aussie. Moving on, let's look at Mr. Price, which we talked about this over the past couple sessions. We pointed this out as we had dropped below a major support here. And what I think is interesting is yesterday we bombed out to 220. You know, I'd peg 220 as being one of as probably being our first major target, the first major level of support. We looked at this level right here in horizontal support, and it was our first target as well from the breakdown of this consolidation. So we literally also kissed that one right on the nose. I mean, couldn't have gotten any more. The only problem was you couldn't get that much stock around that level, but you had plenty to get around 222, 223, 224, that sort of thing. But we had a major reversal there off of that 220 support level. I think without question, we're probably going to come in, test, resist what was support now becomes resistance, maybe around 243 sometime in the next session or two. Wouldn't be surprised to see us get there today. We're right around the 200-day moving average, and hopefully this is a bit of a signal to put in the bottom of for some of the other retailers. All right. One of the big things that, and I missed this kind of intraday, I only saw it after it had already had a major reversal off this level. So English tried to take out the lows. This is the London chart that we're looking at here. We're looking at this one specifically because it's cleaner. We've been seeing so much of a move around in the rand, but I think this one's a little bit easier to have a look at simply because it has less, less to do with the rand, and we can see this level at the 10-pound level has been the absolute bottom of the last 3 months. You know, we tested it, I would say, as many as 10 times to try to drop this 10 rand level or 10-pound level. Hasn't been able to do it. Yesterday we got below it. We traded down to about 994, if I'm not mistaken, intraday, and the second we got above 10, the thing just took off like an absolute rocket. We did about 9.5 million Anglos yesterday, maybe 10 million Anglos. I'm not 100% sure where we closed off, but it was huge volume. Biggest volume, I'd say, if there was no corporate action or there was no closeout or anything like that. It was the biggest volume I've seen in probably a year and a half in Anglos. You got to take note of that. Just looking here, so we've really made a major reversal, kind of popped up out of this downtrend all in one go. I got to watch this and see if there's any follow through today. I would expect some sort of a softer opening, the way that the mining stocks trade in Australia. But if you start to see some momentum building again on the bid, I would jump on this today. We could definitely see a second day play out of Anglos today. I wouldn't be surprised. Next one and last one that we'll look at on today's session is Naspers. So Naspers has had a bit of a, I think it's just gotten guys to lose interest a bit for the most part over the past, maybe month and a bit. We've been stuck in an incredibly narrow range. There's a couple of levels here to really look at. I think that the main level is there inside that little descending triangle that we're talking about, or we're showing right there. We're kind of hanging around resistance, to be honest. I mean, yesterday we got up early in the morning, failed to 18 at one point, drifted back up into the close, 10 cent up another 0.75% this morning. The rump's down about, it's trading at about negative 92. So, and that's with, a lot of, potential unlock and value here with, Flipkart to what, the Flipkart revaluation that we've seen recently that's not valued on the books. So just watch this thing closely. I think it's put everyone to sleep. The one thing that's significant is if you look at this chart and you look at how we've moved out here to the right, look at the Aussie chart here. Unfortunately, my overlays aren't working, but the Aussie's bombed out here in the last, over this last month and a half period. We've come off 3,000 points. Look at Naspers, and look how solid Naspers has been over that period of time. I mean, it's come off a little bit, but for the most part, it's just been moving out to the right, and that's, I think, it's put everyone to sleep. I think we very quickly can be breaking out to the upside of this chart, and we know how this thing moves. It moves in 50 and 100 rand clips, and we could really see this thing take out the highs, just in a couple mornings before you can blink. And that's it for today, guys. Good luck out there.